Hello. How's everybody doing? How about you guys? But I really like the music. I mean, I picked this music myself for you guys, so I hope you enjoy it as well. Let me turn it down a little bit though. I realise it's quite loud. Welcome to the live stream. Today is Thursday, the 21st of November. We're going to be going through our usual stuff, going a few fundamentals, through commitment and trader reports, a few interesting reports that I've seen around and about. We're also going to go through a few currencies as well. So, hello to Abina. Hope you're doing well. I'm doing really well, thank you. Good day to you as well, Ratish. Evening, Eddie. Hope you're doing well. Ratish, would appreciate your bias on different currencies when convenient. Many thanks. We'll get over to that, Ratish, ASAP. There's actually a really interesting development that I want to take a look at involving what you can see on the screen right now, the bonds, right? US bonds. So we're going to talk a little bit about that and its situation on the cut reports. Hello, John. What is your view on gold, silver, and dollar fuel before I blow my account? We'll talk about gold and silver. We'll talk about the Dow as well. I hope you don't go and blow your account. I think if you're at risk of blowing your account, the best thing to do is stop trading. It's hard to do. You want to be involved, but at this moment in time, there is either two problems. You're either being super disciplined, following your strategy, and it's just not going your way, or the latter, which is you're just kind of throwing at the wall and hoping something sticks. So if you are at that stage, then I've been there too, just letting you know, and I'll show you my process, how I do things. Hopefully you can take it into it can help you in some way, shape or form. That's the only thing I can really say. Irfan, good afternoon to you, sir. Right, let's get into a few things then, and we're always going to dive into the news first. Okay, we're always going to dive into the news first. I'm not going to start on Forex Live. I'm actually going to start on the data that has dropped recently, and then we're going to go into a couple of other interesting things as well. I don't know if anybody follows Ray Dalio and how he invests in the market, things like that, but we're going to take a little look at what Ray Dalio is up to as well, because he just released this really interesting newsletter talking about the potential of the changing world order in the US and what that means going forward, potentially. I'm going to talk a little bit about COT reports. I know we did discuss this on Tuesday, but I wanted to kind of discuss this situation here with the 5-year US Treasury notes and what that means potentially for the US dollar going forward. So we'll talk about that as well. But let's get into it. So we've had the BOJ governor speak. Nothing really out of those this morning. RBA governor as well. Nothing that's kind of shocking to us in terms of those. Unemployment claims did come out better. So improving sort of unemployment claims here came in at 213. Was expected to come in at 220, so coming in below forecast there, which is good. That's a good sign for the labour market in the US. We then had the Philly Fed Manufacturing Index, which has declined. So that's something to consider, and we've got existing home sales coming up as well on the cards. But tomorrow really is going to be all about retail sales, PMIs. You can see retail sales expected to come out of the UK. Manufacturing services PMI out of many European countries, including France and Germany. German flash manufacturing PMI, something we need to look at going into tomorrow, especially when it comes to the euro and the potential direction of the euro. And then we've got things like the manufacturing services PMIs out of the UK as well as the US. Core retail sales coming out of Canada. Have you noticed CAD's data starting to turn around a little bit? I don't know if anybody's been taking into account what's going on in terms of Canada, but we can see the CPI coming in up at 2.2%, trimmed CPI, which is your core CPI, coming in at 2.6%. So starting to see a little bit more of that kind of trade that we were talking about last week in terms of looking at the CAD futures data. Let me just pop in CAD futures. Starting to get that little bit of a rebound in CAD futures at the moment, which is something that we have been discussing. And when I say CAD futures, I'm looking at, it means dollar CAD, right? Just kind of keep in mind that. But CAD futures, yeah, dollar CAD, I like to the downside at the moment. But I'm looking at the futures chart because of the commitment of trader data, essentially. So I'm looking for a bit of a rebound potentially here on the CAD futures. So we'll kind of dive into that a little bit. But I found it interesting how we had that data coming out, and yeah, it kind of changed up, and we started to see the bullishness for CAD in line with positive data, which is what you would expect, right? Let me just bring up a pen tool and then we'll get cracking. Some questions just coming through. Let me just get around to you guys. At what hour do you get into the market each day? It really depends for me. Honestly, the past 6-7 months has been a big transition for me. I used to trade quite low time frame, but because of how my sort of role is advancing as an analyst, I don't have too much time to dedicate to trading. So I'm much more of a swing trader now. I'm very picky with how I trade now, and I very much just trade sort of the hourly time frame. The way I try and do it at the moment is I'll actually do a lot of my work on the close. So when the market's closed, I'll scan the markets that are on my watch list, that have been formulated from, you know, if I just get the strength meter up, that's formulated on the strength meter, and then I'll just basically apply, you know, if everything's lined up for me, like how the heat map's mapped out here, I will then go and look at some technicals on it, apply some levels that are of interest, set some alerts, and that's what I do now. Just wait for alerts to pop off, essentially, and go in there. I've just had a notification saying that the connection's unstable. So I don't know why that is, because I am plugged in to the internet directly. So I'm hoping that's not going to have an impact on the stream, but let me know, guys, if it does. But hopefully not. Hi, Bruce. Hope you're doing well. Welcome to the stream. Earthman John, could you please spend 5 minutes to explain how do you get a signal on the cut reports? I don't follow fundamentals, just price action and technicals, but I feel like it's a useful asset. Yeah, and honestly, I actually feel like the commitment of trader reports can be a fundamental indicator, right? So the way I like to think of the cut reports is you've got, you know, hedge funds involved with it and large speculators. Now they're going to be doing tons and tons of research, right, into this. They're going to be people that are hired to manage money, right? They're hired to make money on the markets. A lot of the times the strategies that they use will be macro trading, right? Combined with your technical stuff. So it'd be like a balance of both. I find that the commitment of trader reports gives us that sort of edge, a little bit of an insight into when a trend could potentially end or when the trend's going to continue. So when I saw your follow-up question here as well. Do you follow the direction of the hedge funds? Yes. Ultimately, you want to be following hedge funds because they are trend followers, right? But there are a couple different signals that I like. There's a couple that I prefer to use. One of those being hedge fund extremes. So when you see hedge funds kind of, you know, getting into extreme territories, and I'll come and talk about this now. And there's a couple of ways that you can find out. If you want the free way to do it, you know, because I'll always say you should do it for free first, because if it takes your interest, then maybe you can dive into it a little bit further and spend some money. Do I think it's worth spending money on? Absolutely. But you can also get a lot of this information for free if you have the time. So first of all, there's this website here. I will drop this in the chat for you. I have no affiliations to this, by the way, just letting you know. So, you know, this is just something that I found that puts the information in such a way that can help you
understand COT, right? So they've got some guides on what it is or whatever. But essentially, when you scroll down the page, you've got this, and this is just a spreadsheet, right? You could create this yourself, essentially, to play around with the figures, and you can do that by going to the CFTC website, right? So if you went to cftc.gov, they give you the information here. All you need to do is come over to Market Data and Economic Analysis, come down to the Commitment of Trader reports here, and then what you want to go to is Commitment of Traders, and down to, where's the reports? So you want I believe it's the legacy reports. You want the legacy reports. I haven't downloaded them myself in a while, so you want these here. And obviously you've got the Chicago Board of Exchange, so that's the CBOE, or Chicago Board of Trade, that's the CBOT, CME, then you've got CBOE, and then you've got all the others. So the ICE futures, they'll do like your commodities, X, Y, and Z. But you can download all these formats. Actually, you want historical compressed, I think. Come over to historical compressed. Which ones do we want? Futures only reports, futures and options combined, futures only reports. You want the traders in financial futures only reports. And you can get all this data back to 2009. So that's how you can get it for free. You just hit download and it comes as an Excel. There's a lot of data. There's a ton of data. I can show you how it looks if you really wish to see it. Because I was building my own COT indicator, but I've been so sidelined with stuff recently that I've not managed to get over to it. But this is all the data. You know, if I go to all COT data, this is like all the data from the Commitment of Trader reports, right? So you can go very in depth with this. You know, I was looking to build my own hedge fund sentiment indicator, which I'm still working on, but I just haven't got around to it recently. So, you know, I'm going to put that to the side because I'll take a look at that at some point. But yeah, so essentially we're looking at the COT reports. There's places out there that do it for free. You can also go to barchart.com. They do it for free as well. And they put it in a sort of a line format. But this is quite easy to have a little look at, and I'll explain this here. So essentially, what have you got? Well, you've got the date, right? And then you've got the long and short. So this is the change in non-commercial positions, right? So it says that there. So what are non-commercials? They're your hedge funds and they're your large speculators. When I say speculators, that's like us, right? We're speculating on the market. We are betting on whether the price goes in a particular direction. That's what non-commercial stands for. Now, essentially, you've got your longs and your shorts. These are the amount of contracts that hedge funds are long. This is the amount of contracts your hedge funds are short. Then you've got the change. Basically, that's the difference between the previous week and then the change short difference. And then you've got the net positions, okay? Now, you can actually just create a little bit of a line chart just using the net positions and the net change in price. But essentially, what are you looking for? Now, what I like about this report here, and which you probably should kind of look at yourself if you are going to create your own, is color code it, okay? So basically what you're looking for is kind of like the dark green, or you're looking for the dark red. They are opportunities in the markets, okay? Now, depending on how that shapes up is dependent on kind of what you're looking at. So, for instance, here in August, right, what it's telling us is that hedge funds are extremely long the US dollar, okay? So this is the US dollar index. Hedge funds are extremely long the US dollar. So the likelihood of this going further is less likely, in my opinion. Now, if we go and take a look at the US dollar index chart, okay, let me just bring up the DXY. Where did I put it? Here. And we go look at what's happening throughout August, okay, when they are extreme long. So through here, okay, we can see that the US dollar falls away. Why is that? It's because they're extreme long, and they're then going to start reducing their long exposure within the market. Okay, so if we have a little look back at that, you can see that they were extreme long in August. They were also extreme long in June and July. All right, and you can see they started then taking up. You can look at the numbers, right? You can see it started going from 37s down to 34, 32s, 15, 16, 13, and then in October they got aggressively short. So this is the signal that we were looking at back in October, where we were looking at this long COT signal, right? So you can see here, you can see I've still got it on the chart, long COT signal. You can see I've got short COT signal, long COT signal, long COT signal, and I've kind of mapped them all out throughout the entire. Well, you can see I've gone back since 2017, looking at sort of the COT signals, and you can see that sometimes they give you the tops and bottoms. Sometimes it doesn't work, right? If you have a little look here, there was a short committing a trader signal. This is a daily chart. It went down for a few days, but then overall trend continued. We had another short COT signal, pullback, but price continued. So there's a difference between sort of successful signals and unsuccessful signals, and to me the difference is the extremes on both sides of the fence when it comes to COT reports, when it comes to non-commercials and commercials. But essentially what you've got here is you can look through and very quickly find extremes, right? So I'm looking at euro at the moment. Hedge funds are extremely short euro right now. What does that mean for price? Well, it could mean that we're coming into a market bottom and that we could start to see euro prices move higher. Is it ready yet? In my opinion, no. But this is just a side of it. Another one that I quite like is CAD at the moment. This is why I'm talking about the potential reversal on the Canadian dollar. Why? If you look at the short contracts here, okay, really speaking, you want to look at the net side of it because that just equals it out for you. But you can see how extreme short they are at the moment. You can see that in the net position in here, extreme shorts being built into play. Okay, and you can see they got short aggressively in July. This was the other signal that we were looking at in the top of August. If you remember rightly, we were looking at short dollar CAD in August. Okay, which was this signal here. Okay, and that's how price reacted. Now we're getting a similar signal and price is up here. So I'm actively looking for short dollar CAD, you know, because this is what happened the previous time we were so aggressively short. So yeah, does that make sense? I'm hoping that makes sense. Sometimes I can get a bit carried away when talking about COT, but I think when you question and have a little look there and you say, I don't follow fundamentals, just price and technicals, but you feel like it could be a useful tool to have. That's exactly how I was thinking 7 or 8 years ago, right? When I was looking at why the market moves, okay? And you don't have to dive into everything and you don't have to know everything, right? You can be specialist in just a certain thing. I wanted to know about the market. I'm really interested in it. I like talking about it, as you can tell. This is why it's part of my job. But understanding why a market moves is essential. Now, in theory, who has the money to shape the markets? It's the hedge funds, and it's the amount of contracts that get pushed into the markets, right? It's also businesses that are doing international trade. You know, maybe they're doing, you know, there's a business in Japan that's doing business with a company in the US, and to buy the products that they need, they have to transfer their money into US dollars. They'll do that through a bank, and what a bank will do is put their money into the market to get that exchanged, right? But they do it in stages so that it doesn't spook the market. So yeah, essentially the COT reports to me can tell you a lot about what's going on and give you the reason why certain things happen. Now, there's certain ways you can use. This is the one way of doing it. This is the free way, remember. Then you can go and pay for software like market's made clear. I like this software because it breaks it down really nicely. I'm not affiliated per se, like I don't get anything back from saying that this is good. Apart from that, I know the guy who runs it, which means a lot. So when I'm looking at sort of COT signals here, what is this? You know, it's showing me that commercials are getting aggressive, right? So, and typically when this happens and you have the commercials and non-commercials doing the opposite thing, then that creates a really strong signal that maybe a trend that has been going on for some time is about to reverse. Okay. Another good point of that was what we were looking at. You know, I'll just go open the Canadian dollar because I think that's been the most recent one really from a currency perspective. When we were looking at, so what we've got here is you have a weekly chart here. Okay, so this is just your normal weekly chart. If you got the CAD futures chart up, this is what this is. So the inverse of US dollar CAD. And the last kind of signal we had here, so this is the commercial positioning. They are extreme long. When we looked at how the hedge funds were doing, they were extreme short. Okay, what happened with price? Well, the market reversed and we had this move up in here. This is the one that we were talking about in August. Market moved higher. We then started to see a sell-off again, right? An aggressive sell-off. Okay, why? Well, commercials dropped those long positions on a cliff edge, really. Hedge funds started buying and then dropped off, started selling aggressively as well. Okay, now the one thing I do like about this is we can actually see how they did that. Okay, so if you look at your short positions from the hedge funds, they were extremely short. Okay, at levels that we hadn't seen like ever. You know, if I bring this back to 1980 when this started really going, they're at the most short they've ever been in history. Okay, so that was significant in the market. They then reduced those short. So you see, they're not actually getting long here, right? They're not actually buying CAD futures. They're just taking the exposure off from the short side. Okay, they then start increasing the short positions again, so they're happy to be short CAD futures, but now they're doing it at extremes again. So what we may see is, now they're at this extreme, we might start to see the reversal in CAD prices again, and then another drop, because what this is telling me is that they're not really bothered about getting long. They're more bothered about being on the short side of things. Okay, because you can see those long contracts are sort of dipped below there. So the net just kind of gives you the difference between the two. Very similar here. If we look at the long and shorts from the commercials, not really doing anything on the short side, right? The only thing we can look at is they started to increase those short positions at the top here. But they were extreme long right in there, then reduced those positions off, and then you can see the sell-off came back into the market. But we're now starting to approach very similar levels to what we had. So that's what kind of creates in my head, okay, well, if that's happened before, there's a probability that it could happen again. So I now want to start looking to buy Canadian dollars against weaker currencies. So I'd be looking across the board, maybe at the euro, right? If we go take a look at euro CAD at the moment, I know that that market is dropping because the euro is in distress right now. And look at the move that's had in the market. Okay, so then you kind of bring in currency strength and weakness, and then you can kind of bring in the whole thing here. The way I would have traded this, once we had the breakout of this area here, I'd be looking for the pullback continuation. So essentially, if you go to like an hourly chart, you can kind of see the daily pullback where the market makes higher highs and higher lows. As soon as that kind of changes, you can see we start breaking in these lows here. Markets then making lower lows, lower highs. All I'm looking at this point there is like breakout of lows, retests of averages, things like that, to get short in the market. So that's one area that you could have got exposed to CAD strength, which I still think is going to come through. but I'm looking at potentially other markets. So one of those markets could be the pound. I don't like the situation on the pound at the moment. I think the pound there's a lack of growth in the UK. Yes, CPI came in higher. Suddenly all the analysts are talking about the fact that the BOE aren't going to cut interest rates. Okay, maybe they won't, but the lack of growth isn't great. And if we're going to continue to see a lack of growth, then there will be some stimulus at some point. So I like the idea of pricing in pound downside against a stronger currency. Perfect example here. Market's moving lower. Yes, you have to put your technicals in. So I'll be looking at the fact that we're approaching this support zone, but we also have this support zone down here. So if we were to kind of rebound here, I'd be looking to get short, try and see if we break through these lows down to the 174s. All right. So that's the way my brain works when it comes to trading. So like you've said here, with your technicals and your price action, fantastic. It's a good place to start, in my opinion. And if you can make it work for you, then you don't need to do anything else, right? Because there are funds out there that are just technically based. But when you look at this and then go, okay, well, what if I just add a little bit of a Y on top of it? Then you understand, right? So technicals will be telling you to still be long throughout this period, really, right? But I would know at this point that the UK was doing X, Y, and Z, and that there's a lack of growth, X, Y, and Z. So the macro side of me would be, I don't want to be long pound CAD, right? And that market has continued to push away. I'm not saying I've called it in any way, shape, or form, but it just makes sense to go and look at that market. So yeah, I'm just waiting at the minute. I mean, there was a short signal on the S&P, right? Up in this area here, there was a short signal on the COT reports. Do I want to short indices? No, because in history, if you're a short seller of the indices, you're going to get absolutely slapped. So I'm not, and that's the technical word for it. So I'm not getting involved with that move. I'd rather wait for the price to do what it's doing. If it does come down, I'll look to be a buyer. Of the stock indices. Sorry, other questions. Chris, hello. Makes a lot of sense, especially understanding the turning points and trend continuations. Yeah, so that just kind of brings me back to the other point. So you've also got this page, right, which is called the COT Extreme pages, and this is another one that I like. And the reason why I like this so much is because it just puts it in a real good box for you. So it tells you what the hedge funds are doing. Okay, it tells you what the commercials are doing, and typically you want to be doing the kind of opposite of what the non-reportables are doing, but it flashes us like a thing up when there is an extreme. So at the moment we can see that the commercials are extremely short euro, non-commercials are short, but it's not flashing yet. This isn't flashing. What I would like this to say is long. If I think there's going to be a complete turnaround in euro price, I'd want to see that say long. I want to say this say short, and I want them both to be flashing. Very much like what's going on here for the US dollar index. Okay, what is it telling us? It's telling us that the commercials are extremely long, non-commercials are extreme shorts. Okay, now dollar prices is higher, so I'm not really bothered by that one. The one I'm really bothered by, or what I'm really looking at, is the one here. Let's go back to the COT charts a second. And Markets Maker do a good breakdown of what they show on those type of things. So you've got like all-time highs on open interest, stuff like that as well. Let me go down to here. So the 5-year US Treasury notes. Now we have had 100% signal on this for a while. Now that just basically means that in the past, so if I just scroll back up to the top, you can see it says index 36, 18, and 6. That just means that the contracts are the highest they've been in 6 months, the highest they've been in 18 months, the highest they've been in 36 months. That's all that's telling me right now. Does it mean that there's an actual point to use it? No, it's just letting me know. And we can see that, so these are Treasury notes. So these are bonds in the US, okay, 5-year bonds. And we can see that they've been moving lower.
and the yield prices have, so yields do the opposite of what bonds are doing. So if you look at the US 5-year bond yields, that will be doing the opposite of what these T-notes are doing essentially, and they'll be going higher. Higher yields invite foreign investment, so that's why the US dollar is strong at the moment. It also could signal that the market is expecting either a rate hold or a rate hike, depending on how aggressive it gets in the US. So bonds are on the way to the downside at the moment. What I find interesting about this is that hedge funds are the most short they've ever been. They have been this a couple of times on occasion, but they're the most short they've ever been. Commercials are the most long they've ever been. Now, how long is this going to remain sustainable? That's something that I look at. So let's go and have a little look at the T-note of the 5 years. So I'm looking at the futures chart. So this is the exact chart that you've been seeing on Markets Made Clear there. Okay. Now, what I'm going to do is I'm going to open this back up. I'm going to go to the US dollar index and I'm going to compare it. Okay. So what you'll see is they have a negative correlation, okay, or an inverse correlation. And what I mean by that is when you see bonds drop, the US dollar rallies. Why? Because when bonds drop, the yields get higher. Okay, yields going higher attracts investment into the currency. We've seen that move higher here, but we have that COT signal. We have that COT signal on the 5-year T-note. So if we do see upside in the 5-year T-notes, that can be bearish US dollars, right? So what I'm looking for at the minute, now I don't think it's going to happen just yet, but if we do start to see higher lows come out of the T-notes, the 5-year T-notes, I'm going to be looking to be a seller of the US dollar, okay? If we see this continuation of lower lows and lower highs, I'll happily remain a buyer of the US dollar, okay? But the T-note here is what I'm really looking at, because I feel that this is going to give me the idea of what's happening in terms of US dollars, okay? And this is a really good example. When you compare the two charts together, you can see quite clearly that they have a inverse relationship, okay? So that's what I'm looking at the moment, and that's going to give me an insight into how I could potentially trade the US dollar going forward, okay? Yes, thank you, Abina. Hit the thumbs up if that's something new to you. Hit the thumbs up if that's something that you like to see. Then yeah, hit that thumbs up. I appreciate that. Eddie, thoughts on seasonal correlation between CAD and oil? Is it worth watching? Yeah, always worth watching. Is the correlation as strong at the moment? That's something you have to take into consideration. So if I bring up like let's just do it on the futures market. So CAD futures, let me get rid of the US dollar index there. We'll get rid of some analysis. We'll just make that regular. And then what you want to do is come down to oil. So let me go back up to energies. Let me just grab oil to compare and zoom out a little bit. Don't think this is going to sit right. Let me pin that to the scale left. So again, typically with CAD futures and oil prices, you'll see that they should follow a very similar path. Obviously, Canada is a huge exporter of oil, so you should see that kind of correlation flow in. We haven't really seen too much of a strong correlation at the moment. If we look at how, obviously, because there's other factors coming into play, it's not just the oil prices, right? You can see that CAD has been selling off aggressively. This is also largely due to the fact that the Bank of Canada are cutting rates aggressively at the moment, trying to stimulate growth. So we're getting that move to the downside. Oil prices have remained fairly low, so that is also going to put a little bit of pressure on there. If we do start to see oil prices move higher, I think naturally you'll see a little bit of strength flowing through into CAD. Whether that will be sustained or not, I don't know. We'll have to see if that
correlation comes back. There's some times where the correlation is super strong. So if we look here, for instance, between March 2022 and October of 2022, fairly strong correlation. You can see that they're both pretty much moving in tangent with each other. But there's times where that correlation is not there, and that can be down to other sort of factors of impacting, you know, Canada, or even impacting oil prices. You know, you can see there's a very strong correlation with CAD futures when it was the 2020 pandemic, right? Because CAD futures fell through the floor on oil also falling through the floor, and then we had that kind of monster move up, which was followed. Okay, so sometimes the correlation is there, sometimes it's not. What I would say is, if you want to trade the correlation, just take 5 minutes, have a little look at your correlation there. You know, I know a lot of people look at the correlation between the dollar index and gold prices, right? But there's been 2 times this year when there's been a very weak correlation between the US dollar index and gold. So you've got to be very careful of trading correlations. If you're going to trade it, what I would say is have a little, just grab a chart for 5 minutes, have a little look. Is it correlating? If it's not, I would leave the correlation alone. That is actually one thing that is quite good on here. Let me just open up the, I've just opened up the wrong thing, dashboard. So if I went to Canadian dollar here, there's actually a little bar down the bottom here that tells me what's correlating with CAD at the moment. I don't know if you can see that too well, but so the New Zealand dollar has a 97% correlation with CAD. Again, 2 risk currencies there, so 2 commodity-faced currencies, so that makes a lot of sense. The US dollar has a minus 94% correlation, so again, something to note. Euro, 93%, and the 5-year US Treasury notes has a 93% correlation with CAD futures at the moment, which is super interesting, right? Because that means if I take this off here and I go and grab those 5-year notes again and add them on to compare, we can see there's a strong correlation there. So again, if you think about it, we've just talked about this potential opportunity on these 5-year T notes, right? Of a potential reversal. Again, we have to wait for the technicals to line up and the higher highs and higher lows. But if that does come into fruition, what does that mean for CAD futures? Well, we could see some upside in CAD futures as well. So sometimes things just start to line up a little bit, and it's not too coincidental. Does that make sense? So yeah, let's have a little look at some more. There's a couple that I like the look of, right? So, you know, let's just have a little look at sort of euro. Now, euro is a really difficult market to judge right now, because I just feel that there's a lot of problems going on in Europe at the minute. I'm waiting to see how the market reacts to the data tomorrow. And what I mean by that is, we've got a lot of PMI and services data out of services, manufacturing PMIs out of Europe tomorrow. German economy is just, again, absolutely bashed right now. So what I'm interested in is seeing the likelihood of us getting strong growth here right now is quite low. Okay, it's quite low. What happens if there is strong growth? You know, what if we actually start to push back towards the 50s? Well, that might give a little bit of respite to the euro, and we might start to see this seasonal play come into fruition, right? So it's an election year. If I just grab the election year chart, price, 2024's price has a 91% correlation with the election year at the moment when it comes to euro futures. So potentially there is an opportunity here to be a buyer of the euro. Again, how would I go about this if I was looking for this? I'd again go and look for weak currencies. Okay, so the dollar's not a weak currency at the moment. Although I like the idea of being short US dollars, it's not a weak currency. We can see the market's moving higher here. What I'm cautious of is the fact that we're in these highs, right? In at these 107s. So don't necessarily want to be a buyer either of the US dollar, but I don't want to be short just yet because price action's telling me there's no reason to be short. If I start to see breakdown here, lower high, yeah, I like that idea then. But until I see that, yeah, I'm not going to just jump on it for the sake of jumping on it. So if I do want to try and take a little bit of risk on euro, where do I want to go and take risk on? Well, I like the pound to the downside, right? I like this opportunity for pound to move lower. So what that means is I could probably go to my euro pound chart and have a little look at some upside. Okay, how that looks right now, not great. Admittedly, I think that we've got, you know, some issues here, especially when it comes to the 4 hour, but we have come down into this support zone right here, starting to get a little bit of a rebound. So maybe another higher low situation on the 4 hour, and we might start to see euro pound prices climb. Do I want to take euro against anything else? Arguably no. I mean, look at euro yen today, down. How's pound yen doing actually? Yeah, pound started to come off this little low here. So we're starting to see this trend again come back into fruition, which is nice. I haven't actually traded this stupidly because I didn't check my prices last night because I was really tired last night. So, and I've missed out on a move there. But I like pound yen downside. So yeah, I've been a Aussie and Kiwi very strong today. Yes. For whatever reason, I don't know. Looking against the dollar, it's not. I don't know whether there's been some announcements of stimulus somewhere. I mean, looking at the charts, what is it stronger than, really? It's stronger than the 2 weak currencies, or 3. Kiwi being a weak currency, right? It's stronger than the euro, super weak currency. Stronger than the pound, super weak currency. I mean, we talked on Tuesday about short pound Aussie because I like the Australian dollar from, if you actually take the Australian dollar's partnership away from China right now, the Aussie should be strong. It should be a strong currency. So what does that tell me? It tells me that it's getting priced out because of its partnership with China. It relies heavily on China. China's stimulus has not been great, so the market is kind of calling the bluff on the stimulus. They're selling everything to do with China. They're selling Aussie. You know, they're selling, if you go and have a little look at, let's have a look at copper futures. They're probably down as well. Yeah, copper futures are down as well. So a lot of markets to do with China are getting bashed at the moment. That's kind of impacting the trade there in terms of the Australian dollar. But if you took China out of the picture, you can't, but if you did, then I actually think the Australian dollar would be a strong currency. So really speaking, I think that the Australian dollar is mispriced, and that could present opportunity in itself. Does it mean I'm going to go buy it tomorrow? No, but I would be happy buying it against currencies that are weaker, you know, like the euro, like the pound. Those markets to me are pretty good. The only ones I'd sell it against is the Japanese yen, but we're in a consolidation here. So that's not really that effective to us at the moment. Yeah, we're starting to see a little risk off coming in. I mean, we've just had the US Open, so we can see that we're starting to see a sell-off in equities again. Like I said, I quite like US equities lower. I don't know, actually, Nvidia reported yesterday, didn't they? And I think Nvidia was up, wasn't it? Nvidia was up. Let's have a little look at how Nvidia's opened, because they brought out their earnings, and yeah, I'm pretty sure it was quite positive. Here we go. Let's have a look. So yeah, yesterday earnings surprise 8.26% higher. So yeah, more good earnings out of Nvidia. Shock horror. There's going to be a point where Nvidia earnings are going to slow down. They're hot right now because they're in the AI space. They've got new chips coming out. Everything's going in that term. But Nvidia makes up 7.2% of the S&P 500. To put that into perspective, the top 15 stocks make up 41% of the stock market, the S&P 500. If you look at the Invesco, what's it called? Invesco 50, is it? Equal weight ETF, is it this one? Or is it this one? Top 50 ETF. So these are the top 50 companies within the S&P by weight. So really speaking, if we start to see this move lower, then the S&P 500 will follow that as well. But yeah, I don't short stock markets because they tend to rebound pretty quickly. But yeah, if you want to check out the risk on, risk off mood, just come over to the volatility index. This will give you a kind of a good idea of what's going on. And at the moment, we're kind of low volatility, so not really expecting too much there. Japanese yen gaining a little bit of strength. I do like yen strength as well. Let me just put that out there. Do like yen strength. Why? Well, a couple of different factors. Number one, currency strength meter showing me that yen is getting stronger. Two, if we go to check out the bond yields, Japan's bond yields, okay. Where am I? Sorry if you can hear a vacuum in the background. Someone's decided to vacuum. Yeah, so Japan government bond yields approaching the 1.1% again. Now, I don't know if you're around for when it hit 1.1% in July, but if we go and take a look at what happened in July on the likes of, let's say, US dollar yen, we had this move to the downside. So we're starting to approach a big level again on the Japan yields, and I quite like the idea of being a buyer. But again, this is where we can kind of pull out of this and say to ourselves, okay, I want to be a buyer of yen if certain scenarios pick up, or if if we see the reactions that the data's pointing to. If that's the case, where am I going to benefit the most from that? And to me, that's against currencies that are weak. And I know I'm like a broken record when I talk about this. Sometimes when I talk to you guys, I think I'm a broken record, and I think, God, they've heard this information so much that I must just sound like a broken record. But if we go take a look at pound yen, for instance, euro yen, Kiwi yen's probably a really good one to have a little look at. But I'm not really made up with the price action here on Kiwi yen. Maybe Swiss yen, potentially as well, because that just came up into a resistance point. But for me, I'd be focusing pound yen, euro yen. So when it comes to risk, it doesn't necessarily mean risk on, risk off. Like if you look at that day, it doesn't mean like, oh yeah, we're fully risk on, risk off. If it's sustained over a period of time, then I'd say, yeah, the market is in a risk-off mode or a risk-on mode. But, what do you typically see in risk-off? Well, you see dollar buying, yen buying, Swissy buying. What do you usually see in risk-off? On the flip side of that, Aussie weakness, Kiwi weakness, CAD weakness, and you've been seeing those. So I'd say, yes, the market is technically a little bit risk off. Try and tell the stock market that, because the stock market is not playing ball at the moment. Any other questions, guys? I hope that's been informative today. So yeah, from my point of view at the moment, I like downside in stock markets, but am I going to short them? No, I don't think that's a good idea. Couple of markets that I like long recently. Natural gas has been long. So this was a commitment to trader report signal down here. So I like natural gas long. This is going to continue to climb for a little bit. I think there's one because of that signal, but I would be cautious as it approaches these highs, because December's usually pretty bad for natural gas prices. What else have we got? I haven't talked about gold. Gold approaching resistance, but I don't know whether I want to be on the short side of gold at the moment. I'm a bit on the fence with that, because if I think that the dollar is still going to start to sell off, then there could be a good chance that gold does start to move higher. Plus, if the S&P 500 takes off, then I'm interested. What I want to see really is if the S&P does sell off, I'm expecting gold prices to sell off. But if we start to see like a big move in the S&P 500, then I'd happily be a buyer of gold again in the near term. Obviously, I've been very short silver. Again, another cut signal. But I'm not shorting anything at the moment. Same with platinum. I like shorts on platinum. But again, kind of come out of those positions now. So I'm actually flat right now. I'm not in anything at the minute. Let's have a quick look at how Bitcoin's doing. About to hit that 100k. It's about to get in the headlines again, right? Still waiting for my mate to text me about Bitcoin, and until then, you know, we'll keep looking for long opportunities. But I don't want to get long here. That just does not make sense from a risk and reward. Unless you're on like a 5 minute trying to buy these little pullbacks at the moment, does not make sense for my style of trading. So Bitcoin, I'm not bothered about at the moment. Okay, so that's just a little snapshot of what's going on. I would, you know, I was going to start to talk about gold in depth, but I don't like it. I don't like what's going on here at the moment. And you know, when in doubt, stay out. That's the saying. You know, I liked the idea of being long down here. I think that was a good opportunity. I didn't take it, but I thought it was a good opportunity. You know, looking at the hourly chart, there might have been a good couple of opportunities on a bit of a rebound, a bit of a breakout move here recently. You know, you've had like this consolidation breakout. So yeah, I would have rather have been on the long side down at this support, but yeah, do I think it's long term? No, I don't know. We'll let the market decide on that. I'm not going to make a guess. I'm not going to make a guess on that. I'd be very interested to see these stocks come lower though, because we've been so. Let's look at the VIX futures. We've been so like bullish for so long. What was that? What was the percentage run on this? 123%. We've only done 70%. So arguably we've not really done the average of what we even had in 2020. 38%. And that's not total obviously value. Like you wouldn't see that in your portfolio. 59% after that little pullback there. That pullback at 94. 85. Okay. I was just trying to think if we were like coming into a situation where we're like extremely overbought, like if we had very similar sort of rallies in the past. But I mean, it's hard to look at that. Honestly, I was just going to sit out and wait and think about what happens if we do start to pull back into these kind of support zones down through here, and go from there. All right then, guys. So we've been running about 55 minutes. I usually like to do this about 50 minutes to an hour. So you know the drill. If you want to come find me and chat to me elsewhere, you can do it on LinkedIn. You can find me on LinkedIn if you want to come chat to me there. I'll post a little bit of analysis there. So I'm going to leave you all. I hope you have a great rest. I'm not back on Tuesday. I'm away from screens on Tuesday, so I won't be around. So there won't be a live stream on Tuesday, unfortunately. The next one will be Thursday, or I might do Monday. What do you think, guys? Should I stream Monday instead of doing a video, or would you just prefer a video on Monday? Because I could live stream on Monday instead. Let me know. We'll do a quick comment poll on here. Comment yes for Monday, no. No if you don't want it. Yeah, stream Monday. Yeah, it's not too much trouble to stream. It's actually easier to stream than making a video. You know, it's a lot easier. But there's a lot involved in making a video. There's a lot of cutting back and forth and X, Y, and Z. Right then, guys, I'm going to leave it there. Only Rye Guys said that he wants to stream, so for you, Rye Guy, I'll be here on Monday. If you can leave the stream a thumbs up and a like, I'd really appreciate that. And if you are new and you've enjoyed the content that you've seen, maybe it's starting to get you to think a little bit outside the box when it comes to trading the markets, then hit that subscribe button and I will be with you on Monday. I'll make sure I do a live stream on Monday. So thanks, guys, and I'll catch you then. Cheers.